Welcome back to the Gold IRA Blueprint Podcast. You know how this works. You ask the questions, we do the research, and we turn it all into actionable insights for your retirement planning. And you American retirees out there know just how important planning is. Today, we're tackling something you really need to know about: central bank policies. Specifically, how they could impact gold IRA valuations in 2025. And hey, if you're already thinking about a gold IRA and looking for some guidance on picking the right company, head over to goldirablueprint.com/exclusive. You can grab our free checklist there, packed with tips based on all the insights we'll be uncovering today. And we're going to be diving into some pretty complex stuff: interest rate adjustments, quantitative easing, even currency devaluation. But before we get ahead of ourselves, can we take a step back and just make sure we're all on the same page? What exactly are central bank policies, and why should anyone, especially those thinking about retirement, care about them?
Great questions. Let's break it down. Think of central bank policies as the tools that institutions like, say, the Federal Reserve here in the US use to try and keep the economy running smoothly. It's kind of like steering a giant ship. They use these policies to try and control inflation, promote economic growth, and just generally keep things stable. And believe it or not, these policies can have a pretty big impact on your retirement savings, especially if you're considering a gold IRA.
Okay, so they're steering the ship, trying to keep the economy steady. But how does that actually impact something like a gold IRA? I think that's the part where a lot of people get lost.
It's all about the ripple effects. Think of it this way. Any action the central bank takes creates these waves that spread out and impact all sorts of things: interest rates, inflation, even the value of a US dollar. And those factors, well, they all directly or indirectly influence the price of gold, which, as you know, is the foundation of a gold IRA.
So it's bigger than just gold itself. It's about the whole economy, the whole picture, and how these central banks are trying to manage it.
You got it. Let's look at interest rates, for example. When the Fed raises interest rates, it usually makes holding gold a little less attractive. Why? Because gold doesn't generate interest like a bond would. So in a world with high interest rates, investors might be more likely to put their money in assets that give them a better return, maybe move it away from gold. And that can put some downward pressure on gold prices and potentially even affect the value of a gold IRA.
Okay.
Huh?
So rising interest rates could mean my gold IRA might not grow as much, at least in the short term.
That's one possible outcome, yeah.
Hmm.
But it's not always so cut and dried. The timing of interest rate changes, how big those changes are, all of that can really influence how gold reacts. It's not just a simple rates up, gold down equation. Sometimes, even if rates are rising, gold can hold its value or even increase if there are other things happening in the economy. Things like geopolitical uncertainty, maybe a weakening dollar. Those can all play a role.
So it's more nuanced than that.
Yeah, way more nuanced. That's why it's so important to look at the whole picture, not just one piece of the puzzle. And a big piece of that puzzle is inflation. When central banks print more money, it can lead to inflation, right? And inflation eats away at the purchasing power of the dollar. Historically, though, gold has been seen as a hedge against inflation because it tends to hold its value when currencies weaken. So, in a way, a gold IRA could act like a safe haven during times of economic uncertainty or rising inflation, which I know is something a lot of retirees are worried about these days.
Yeah, for good reason. So let me see if I'm getting this. We've got interest rates potentially making gold a little less attractive as an investment. But then we've got inflation potentially making gold more attractive as a safe haven. Sounds like there's a bit of a push and pull going on.
You've got it. It's a constant balancing act. And then, on top of all of that, we can't forget about global economic uncertainty. Think about it. Whenever there's political instability, wars, financial crises, where do investors often run to? Gold. It's seen as this stable asset that can hold its value when other markets are going haywire.
Right, right. I remember back in 2008, when the stock market crashed, the price of gold went way up. Everyone was looking for a safe place to put their money. So having a gold IRA could potentially give me some stability in my retirement portfolio during those kinds of turbulent times.
Exactly. Think of it as a bit of an insurance policy against those unpredictable market swings. Now, of course, this doesn't mean gold is a guaranteed winner, no investment is, but understanding these dynamics, how these different factors interact, that's how you make informed decisions about how to protect and grow your retirement savings. Oh, and before I forget, if you're looking for more guidance on all this, don't forget about our free checklist at goldirablueprint.com/exclusive. It's got some really helpful tips for getting started.
Great reminder. We'll be right back after a quick break.
Welcome back to the Gold IRA Blueprint podcast. Last time we talked about how central bank policies can impact things like interest rates and inflation and how that can influence the value of gold, which of course affects your gold IRA.
Right. It was eye-opening to see how all the pieces fit together, how it's not just about gold itself, it's about this whole big economic picture.
Exactly. And that's why it's so important to understand all these factors when you're planning for retirement.
Yeah, for sure. And speaking of planning, I'm curious what steps people can take to maximize the value of their gold IRA, especially with all these complex dynamics we've been talking about. Any practical tips you can share?
Absolutely. One of the most effective strategies is diversification. Now, you might think of diversification as spreading your investments across different asset classes like stocks and bonds. But diversification within your gold IRA can be really valuable too.
So you're saying even within my gold IRA, I shouldn't just put all my eggs in the gold basket?
That's right. While gold is often considered the go-to safe haven,
Mm-hmm.
other precious metals like silver, platinum, and even rare coins can offer some unique advantages. They can potentially reduce your exposure to the volatility of just holding gold.
Oh, interesting. So how would that work in practice? How would diversifying within precious metals actually play out?
Sure. Let's take silver as an example. Silver often moves in a similar direction to gold, but it also has a lot of industrial uses, which can affect its price independently. So if demand for silver in manufacturing goes up, its price might increase even if gold stays flat. Having some silver in your gold IRA can provide a little extra cushion and maybe even boost your returns.
So silver is kind of like a multi-purpose metal. It's got one foot in the investment world and one foot in the industrial world.
Exactly. And then you have platinum. Platinum is another precious metal with a lot of uses, mainly in things like catalytic converters for cars and other industrial applications. That makes platinum sensitive to different economic factors than gold.
Got it. So by adding some silver and platinum to my gold IRA along with my gold holdings, I could potentially create a more stable portfolio, one that's not as vulnerable to the ups and downs of just one metal.
You got it. It's all about spreading that risk. And don't forget, you can always talk to a reputable financial advisor, someone who specializes in precious metals and IRAs. They can help you put together a diversification strategy that fits your risk tolerance and your retirement goals.
That makes a lot of sense. So diversification is one key strategy. What's the other piece of the puzzle when it comes to getting the most out of a gold IRA?
The second strategy, and this is a big one, is to stay informed about what's happening in the markets, especially shifts in central bank policies. Remember those instruments we talked about? The ones central banks use to manage the economy. Well, they're constantly adjusting those instruments, and those adjustments can send ripples through the markets, impacting things like interest rates, currency values, and of course the price of gold.
So to manage my gold IRA, well, I need to keep an eye on all these central bank moves.
Yeah. You don't have to become an expert, but staying informed is definitely key. There are lots of ways to do this. You can follow reputable financial news sources, keep tabs on announcements from the Federal Reserve, or even subscribe to newsletters that focus on precious metals investing. Even something as simple as setting up a Google alert for central bank policy changes can make a difference.
Those are some great tips. It sounds like it's all about staying ahead of the curve and trying to anticipate those potential market shifts.
Exactly. And remember, if you're ever feeling overwhelmed or unsure, you can always talk to a financial advisor. They can help you make sense of it all and adjust your gold IRA strategy as needed.
This is all super helpful. It really shows how important it is to be proactive and informed when it comes to managing your retirement savings.
Absolutely. Knowledge is power, especially when it comes to your finances. The more you understand about these factors, the better equipped you'll be to make decisions that support your long-term goals.
And speaking of understanding, earlier we talked about a visual aid from our source material, a comparison table that shows how different central bank actions can impact gold IRA valuations. Let's take a closer look at that table now and break down each row.
Sounds good. Let's start with interest rate hikes, which we touched on earlier. The table shows that when central banks raise interest rates, it usually puts downward pressure on gold prices.
Right, because gold doesn't earn interest like a bond or a savings account. So when interest rates are high, it becomes a bit less appealing to some investors.
Exactly. But again, it's important to remember this is a general trend. The actual impact of interest rate hikes on gold prices can be different depending on what's happening in the economy and what investors are doing. Sometimes gold can hold its value even with rising rates.
Got it. So it's not a hard and fast rule, but something to keep in mind. Now, what about quantitative easing? The table suggests that this can actually increase demand for gold and potentially lead to higher gold IRA valuations over time.
That's right. Remember, quantitative easing, or QE, involves central banks injecting money into the economy, which can lead to increased inflation. And as we talked about earlier, inflation can make gold a more attractive investment as a hedge against the declining purchasing power of the dollar.
Right. It's that classic safe haven idea. People turn to gold when they feel like their currency is losing value. It's like a store of value that holds steady even when things are fluctuating.
Exactly. And while QE might not have an immediate effect on gold prices, it can create an environment where gold does well in the long run.
Makes sense.
Yeah.
Okay, last row on our table is currency devaluation. Seems pretty straightforward. When a central bank devalues its currency, gold becomes more attractive. And so gold IRA valuations tend to go up.
Precisely. Currency devaluation can happen for different reasons, including central bank policies aimed at boosting exports or managing debt. And when a currency loses value, investors often turn to gold as a way to protect their wealth.
This table really helps visualize these complex relationships between central bank actions and gold IRA valuations. It's a great reminder that we need to be aware of these broader economic trends and how they can impact our retirement planning.
I agree. It's all about seeing the big picture and how everything connects.
Well, we've covered a lot of ground in this deep dive. From how central bank policies impact gold to practical strategies for diversifying your gold IRA and staying informed. There's a lot to consider. And before we move on, I want to remind our listeners about that free checklist we mentioned. It's available at golderablueprint.com/exclusive, and it's full of tips to help you choose the right gold IRA company for your needs.
It's a great resource, especially if you're just starting to explore gold IRAs or feeling a little overwhelmed by all the choices out there.
It can really help you on your retirement planning journey.
Absolutely. So before we wrap up this part, we want to leave you with something to think about. Given everything we've talked about today, what can you do right now to make sure your retirement savings can handle those potential economic ups and downs and help you achieve long-term financial security?
It's a question worth thinking about. What are your goals? Your risk tolerance? What kind of future do you want for yourself? And we're back for the final part of our deep dive into central bank policies and their impact on gold IRA valuations. We've covered a lot of ground today from what those policies are, how they can affect the price of gold, and what you can do to diversify your gold IRA and stay informed. It's been a lot to take in.
It really has. But it's been great to see how all these pieces of the financial world fit together, especially when we're talking about something as important as retirement planning.
For sure. So just to recap for anyone who might have missed parts 1 and 2 or maybe just needs a refresher, what would you say are the biggest takeaways from our deep dive so far?
I'd say the first big takeaway is that central bank policies, those interest rate changes, quantitative easing, currency, devaluation, all of that, they can create a ripple effect that impacts the whole economy, including the precious metals market.
Right. It's not just about gold in isolation. It's about this whole interconnected web of financial forces.
Exactly. And those policies can affect the value of your gold IRA sometimes in ways you might not expect. So staying informed and understanding those broader economic trends, that's crucial.
And the second takeaway that really stood out to me is the importance of diversification.
Yeah.
Spreading your investments across different asset classes, precious metals included, to help manage risk and create a more balanced portfolio.
Yeah, and even within your gold IRA itself, diversifying your precious metal holdings with things like silver, platinum, or rare coins can make your portfolio more resilient and potentially boost your long-term growth.
Diversification is key both in the big picture and the details.
Absolutely. Don't put all your eggs in one basket, right? And the last thing I want to emphasize is how important it is to stay informed. The world of finance is constantly changing, and central bank policies can shift quickly.
You almost need to have your finger on the pulse of the global economy.
It might feel that way sometimes, but it doesn't have to be overwhelming. There are so many resources out there, reputable financial news websites, newsletters that focus on precious metals. Even just setting up Google alerts for certain keywords can help you stay in the loop.
And if you're ever feeling lost or confused, it's always a good idea to talk to a financial advisor or a tax professional who specializes in precious metals and IRAs.
Absolutely. Having a trusted expert on your side can make all the difference.
Now, before we wrap up this deep dive, I want to remind everyone about that free checklist we've mentioned throughout the episode. You can find it at goldarrayblueprint.com/necdrill. It's packed with tips to help you choose the right gold IRA company for your needs.
It's a really valuable resource, especially if you're new to gold IRAs or just feeling a bit overwhelmed by all the options out there.
It can be a game changer when it comes to planning for retirement.
So as we say goodbye, we want to leave you with one final thought to ponder. Given everything we've discussed today, what steps can you take right now to ensure your retirement savings are positioned to weather those potential economic storms and help you build that secure financial future you're working towards?
It's a question worth considering. Think about your goals, your risk tolerance, and what you envision for your future.
We hope this deep dive has given you the knowledge and the tools you need to make those important decisions.
Your retirement is worth it. Take the time to plan, learn, and make choices that align with your vision of a secure and fulfilling future. That's all for today's deep dive. Thanks